Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Wednesday, April 22nd, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Today we have a special show because we'll have the honor to host later on Mr. Steven Stairs, CEO of Benton Resources. The company is involved in Newfoundland. They're exploring a gold project. They also signed some agreements with a company named Nordman. So Mr. Stairs will be with us later on to tell you why his company should represent your potential next investment. Technically speaking, the stock is at an interesting support at 5 cents. That stock will be a buy because it will also reverse its downward trend. So stay with us. Mr. Stairs will be open to answer your questions if ever you have any questions for him. Now let's take a look at the market situation here right now, folks. We actually have the NASDAQ that remains neutral. For swing trading, the strategy that I laid out yesterday to stay on the sideline is still valid. On the NASDAQ, we're neutral. On the Dow Jones as well. On the SPY as well, even if we're actually testing the resistance slightly. But the TSX, it's the index that is lagging its peers. On the TSX, we have a clear, slight bearish cycle that could bring the index towards 15,000 because this is where actually we have the 50-day moving average. This is where we'll also have this upward trend there on the TSX, but it's really a slight bearish cycle. Actually, when we had this bearish cycle, we had a wave of buyers that came in, so which makes the opening of new short positions pretty perilous on the TSX right now. So let's start with the American markets to see the sectors that have actually led the morning's increase. First of all, we had some stocks in the technology sector. There's Visa, which is really strong. Visa, MasterCard are all strong because China has announced today that they will lay out some rules that will allow those companies to do business in China. So, of course, China is one of the biggest market, and this is why Visa is surging today. We have also Ceragon Networks that is clearly breaking out. It's in the technology sector. It's a sector that continues to stay strong on the American markets. A lot of stocks also in the Chinese stocks are active. STV is one of the most active and most interesting breakouts of the day in the technology sector. Sina, also one of the nice breakout in the technology sector, and Renren. So a list here is of all those stocks in the technology sector that are either breaking out or that could start a breakout, and the ones that could start a breakout are all the ones that are highlighted with an S. So definitely those stocks should definitely be put on your watch list today on the technology sector if you want to have some exposure on that sector. If we make a follow-up on the healthcare sector that we had yesterday in terms of the movement has not been as active. There have not been tons of new breakouts in the sector. So if you have opens and positions in the healthcare sector yesterday when there was a movement in the NASDAQ, on most of those positions, I think you should continue to hold on to them. Now let's see about the movement that we have in the Chinese stocks. We have a list here of Chinese stocks that could definitely are breaking out. There's Weibo, which is one of the nicest breakout as well. STV in the technology sector, Zhuan Fashion, clear breakout, explosive. Sina, Jiazo Solar Holding, which is a clear breakout. Xiaopin, that could break out higher than 1720. China Cash, it's mostly a continuity of the bullish cycle. With a 19% increase, I think it's kind of too late to get into a stock like that. And Vimcro, it's mostly a pursuit of the bullish cycle. So some Chinese stocks are breaking out. Those are the ones here that are most active and in terms of risk represent the less risky because of the loss potential. Those are the ones here that are the nicest in terms of the Chinese companies that are breaking out today on the American markets. If we take a look also at the situation here that we have on the TSX right now, we have the beginning of a bearish cycle, but which sector were responsible for that decline? Well, on the TSX, it was clear. It was, first of all, the gold sector, and also the financials that actually played a role on that decline. But we're going to see that on both sectors, gold, financials, that there are definitely not a lot of short opportunities. Actually, in the financial sector, though, it's a bearish cycle, yes, because we're reversing this upward trend, but there are not a lot of short opportunity. Actually, I believe that those banks such as CIBC, national banks that are breaking down today, it's only a wave of profit-taking opportunity that we have seen on this sector. And so far, it's not a sector that I will feel comfortable to short. And I will tell you why in the next segment. So welcome back, folks. So why I think the financial sector is not a sector worth to short? It's simply because with the low interest rate environment, we know that banks had a big exposure into the mortgage business. Recently, what we have seen is that banks have started to diversify their business and focus more on wealth management. So if ever there's a rate hike during the year, that's what a lot of analysts expect that the Fed is going to do. Well, then those banks actually kind of have hedged themselves a little bit by putting more of their exposure into the wealth management business. So this is actually something that I think will be beneficial to our banks. And even if they're going down today, let's say National Bank of Canada, it's a clear breakdown. If you bought that stock here on April 6th, well, it was not a 10% potential until $50. But I think that with this decline, if ever it continues, whenever National Bank reaches that support at 45.62, that will only be an opportunity to get that bank at a cheaper price. Also, we had the rally among energy stocks as well. This has actually calmed investors' fears because a lot of those banks have made a lot of loan to those energy companies. With the low price environment, a lot of them have taken a hit, but a lot of them have been able to restructure their costs, minimize their expenses, and with the recent rally that we have seen among the energy sector, this is something that actually have calmed investors' fears. So for those reasons, the diversification into the wealth management business, the slight rally that we have seen among the energy stocks, I think those are enough reasons why I think you should not panic with this decline that we're seeing in the financial sector. Now, concerning the gold sector, we have gold that is testing its support. HGD, which is the bearish ETF on gold, has been recommended on marketgurus.tv that you can have access for free for 10 days. And HGD represents a good opportunity for day trading. For swing trading, I think we need to see gold going below 113 points. So for GLD, is not doing so. It's testing its support dangerously, yes, but not a bearish cycle yet. Even the gold stocks, look at the gold sector, it is unable to start any bearish cycle. We have some stocks that were neutral that I've talked to you about yesterday that remains neutral, testing their support, but none of them are able to confirm a clear breakdown. Look at Argonaut Gold, remains neutral. Look at Barrick Gold, testing its support, yes, but remains neutral. So definitely there's no panic among gold stocks. If you had some positions on your watch list, So far, you still have to put them on your watch list, and none of them are short opportunity for the moment. The sector that is at risk is the energy sector, simply because the sector right now, we have oil that is showing some weakness. Oil is testing its upward corridor, could reverse it if ever oil USO goes below $19. And we have the energy sector as well, which made an attempt to start a bearish cycle. But as long as we do not have a clear confirmation of the bearish cycle, as long as we do not have the clear reversal of this upward trend, it will not be warranted to close your long exposure on the energy sector. And this is why on marketgurus.tv, we have recommended that ETF, HEU, as a buy around April 1st, April 2nd in our analyst shares portfolio. And even if we have some weakness in the energy sector, it's not an ETF that we're going to close because it still maintains its upward trend. And the trend is your friend. So there's no need to close those positions, but you definitely have to put them on your watch list. Overall, for swing trading, some stocks, some sectors are standing out. We have a lot of stocks in the technology sector. You saw earlier today where several stocks are breaking out. A lot of them are Chinese companies, Sina, Jiazo, STV on New York. Those are the most active stocks for day trading. And on the energy sector, though, we still have this neutral phase. A lot of stocks remain to be watched, but you should not close them so far because it's only a correction. We're still neutral. In the financial sector, a lot of weakness there, but not a sector worth to short, but to watch for those banks to see when are they going to reach their former support. And at this point, that will be an opportunity to get those banks at a cheaper price. In terms of the news, there's no important news except for Chipotle Mexican Grill here. This company is taking a big hit. They beat estimates, revenues have increased, but I think this company is considering to increase their prices. So maybe analysts are not happy with that. Boeing did well. Yum Brands as well did really well. Coca-Cola as well did really well. And McDonald's surged because on May 5th, they will announce their new strategy to trim their menu to give actually less choices, which will be able to allow customers to make their order quicker instead of having a bunch of choices and don't know what to choose. So I think analysts are happy with that decisions that will come on May 4th or May 5th.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
Welcome back, folks. So we have one question here from Jules. Jules, what do you think of CCO raise, Cameco? A few days after the deal with India has been revealed, is it a buy or only a speculation for monthly fool? Thanks. Well, the deal with India was announced, I think, last week. It's a good thing for Cameco. However, compared to the volume of sales that Cameco has, it's really minimum. Cameco, I think, sells about 22 million pounds of uranium per year. They will only sell to India 3 million pounds of uranium. India is the booming market. So I think analysts are happy because at least they can sell some uranium to India, but you should see it in the medium to long term. Can Cameco build up a presence there when it could actually increase their sales to India? Technically speaking, Cameco today is one of the best breakouts. That's we recommend on marketgurus.tv. Those are the things that I don't like, technically speaking. It's because we have the stock that is actually breaking out, already taking 6.08%. So the loss potential will be until the stock. You have to close that positions if ever the stock reverse this upward trend. It has to be around 1951, which makes it a big loss potential for Cameco. And usually when a stock is breaking out after not stabilizing for enough time around its 200-day moving average, this bullish momentum tend to be short-lived. So those are the things I don't like with Cameco. However, if this breakout continues, Cameco could easily reach $22. So that would be definitely a 10% potential on a stock like Cameco. So what I would suggest you to do is, if you want to buy Cameco today, I think you could build up your long positions, go in with a half positions or a third of a positions in Cameco instead of opening a full position on a stock like that. Trade that stock. So as long as it maintains its upward trend, you will continue to hold on to it. And I think the reasons why we could expect Cameco to do well is because even if they're exporting to India, even if it's a minimum amount compared to the annual sales, on the medium to long term, it could play out well because India is the uranium market with the higher growth in the world. So this is something that could be positive for Cameco on the medium to long term. Now, we have one question here from Pat. What do you think about sell in May and go away for energy stocks? Would you sell long positions in May and back in July or continue to hold? Well, sell in May and go away, it's a theory mostly that cannot be applied to the markets in general. There are some pros and cons to that theory. For instance, let's take a look at the energy sector here, for instance, right? On a yearly basis. So look, those are the points here in May. So here on 2011 in May, if you have sold out your positions in energy sector, good job. But you say sell and go away and buy back in July. But around July, you would have bought back. But look what happened in July on 2011. Went even further down, right? And May here went down. In July on 2012, it would have paid off. Here in May, we lost. In July, it would have paid off in 2013. In 2014, it didn't work out because in May we stayed flat, right? In July, we went even further down. We started to go down. So I don't think that it's a theory that you can apply to a particular sector. I think you just have to stay, most of the time, technical, right? Of course, there's some seasonality in the market in terms of in a particular month. Sometimes there's an inflow of money into certain sectors or the way investors act sometimes. Yes, there's that. But I think you should really stay technical, meaning that right now, if you have bought some energy stocks during the month of March, April, there's no need to close those positions because those positions are still maintaining their upward trend and the sector still maintains its gains. So the new entry point on those energy stocks will be higher than 246. So I do not agree with this theory 100%. I think you cannot only rely on it to take your decisions among energy stocks. You'd rather stay technical, and this will increase your probability of success in terms of timing for your stocks. Now, Dave, is it time to sell RMX? Is it time to sell? RMX, no, right? Because the stock is still maintaining its upward trend. So I don't think you should sell RMX. However, I know this. I don't know if they're in gold or mining. I don't know which sector they are in. But if you're a little stressed, you have too much exposure on RMX, you might slightly reduce your exposure there on a stock like that because we totally overbought. So the wave of selling pressure could continue on a stock like RMX. So depending on your risk aversion, your risk tolerance, I would say that if you want to reduce your positions, okay, but to sell it totally when the stock is still maintaining its upward trend, I don't think it's wise to do so on RMX, but maybe to reduce it because of this overbought situation on a stock like RMX. Now, those are the best swing trade of the day. You see most of those stocks are Chinese companies, Weibo, Sufan Holdings, and Renren, and Cameco is our best picks on the Canadian side. And as for the best day trade of the day, it's also a Chinese company. It's Weibo with several entry points. That stock was recommended on Market Gurus.tv around 10:30, so around this area when we had the first clear signal there. And since then, the stock performed pretty well. As for swing traders, well, there's the 200-day moving average around 1640. This is the thing I don't like on a stock like that because it doesn't give us a lot of potential. The stock could be explosive though. So if you're buying that stock today, instead of having to tolerate a support until 1450, I will put my stop loss if ever we lose all of today's gains on a stock like Weibo. So that would be my strategy in terms if you want to swing trade a stock like that. So folks, stay there because Mr. Steven Stairs will be with us. He's the president and CEO of Benton Resources, a company involved in the gold exploration sector and Newfoundland.